Sticky inflation. Does this put a pause on interest rates coming down? Let's unpack the numbers. So yesterday, Tuesday, inflation came out and still remains a little sticky from the Fed perspective. Headline CPI remains at 2.7%. Core CPI jumped all the way up to 3.1%, which is the Fed's preferred inflation number, core over headline, okay? And we know, we've talked about it several times, inflation is going to be 2.7%, or it's going to range 2.6 to 2.9% for the next 3 months. Why? Last year at this time, inflation was pretty steady. It is going to take all the way until likely Q1 for inflation to fall towards that 2% level. That being said, the market didn't react too badly, right? Market is actually still near those yearly lows, right? Last week at this time, I think interest rates were a little bit better than they are today. But overall, interest rates are the lowest they've been in 2025. So we're still starting to see good signs of interest rates coming down. And why is that the case? We know interest rates are being driven, or over the last 3 years, interest rates have been heavily being driven by inflation and by the labor market. So if inflation remains sticky, why are interest rates coming down? Let's unpack that. So for once, we may finally start to see a divergence where inflation remains sticky, but the Fed is going to be cutting interest rates. As of right now, the Fed is 100% baked in, cutting interest rates September 17th, okay? So on September 17th, they will cut. It is very likely, as of right now, there is 3 projected rate cuts this year. There will be another cut in November and another cut in December, right? We are seeing the influence from the Trump administration to push lower interest rates. We are seeing several Federal chair people push lower interest rates as well, saying, hey, we should have been cutting. We're seeing a weakening economy. We're seeing all this. So they are pushing it. Today, Treasury Secretary Scott Bessent basically said he believes the Fed should be about 150 to 175 basis points lower than it is today. If we get 3 cuts, one in September, one in November, December, that's only going to be 75 bips. Bessent believes we should be 175 bips lower today. So even if we drop 75, we won't even be at Scott Bessent's target, which is 175 bips lower. So yes, we are going to see the Fed start to cut interest rates. We know this affects the short-term mortgage interest rates. It doesn't affect long-term. The correlation still plays a factor as the trend heads lower, but in about 90 days, we'll start to see this come down. Now that's where everything will really start to play. Still a while, right? 90 days from now, because the Fed will still be cutting. But if inflation is still sticky, 2.7, long-term interest rates, 30-year fixed interest rates, might remain flat. So that'll be a very interesting concept to see how this plays out, okay? But overall, we're seeing the trend head in the right direction. Huge win. So another topic I wanted to touch on today, because a lot of people text me about it, was the Great American Mortgage Corporation. If you didn't see, Trump posted on Truth Social, it's an AI photo of him in the New York Stock Exchange with the Great American Mortgage Corporation, okay? Kind of hinting at the idea of taking Fannie Mae and Freddie Mac public and using these IPO funds to help fund some Treasury funds, right? So again, this is just an idea. This is not an official announcement. To basically explain what this is Fannie Mae and Freddie Mac are under government conservatorship. They have been for 18 years since the great financial crisis, okay? Obviously, it was to ensure that we were underwriting loans, or the mortgage industry was underwriting loans correctly, doing this. And this is why we see default rates so incredibly low, right? A lot of people have this belief that, hey, might be in a recession or this or that, right? Well, in reality, look at default rates. Mortgages have been spot on. You're not seeing them. You're not seeing people foreclosures. They're incredibly, incredibly low. And that is even with interest rates being above 6% for 3 years. This month, August, marks a 3-year mark that interest rates have been above 6%. And we're still not seeing heavy default rates or foreclosures, okay? Why? Because we've been underwriting loans correctly. Fannie Mae and Freddie Mac under government conservatorship. We are going to finally release it out of government conservatorship. And what Trump wants to do is he wants to merge, or again, he's teasing the idea. He is going to tease the idea that he's going to merge Fannie Mae and Freddie Mac into one public entity called the Great American Corporation, put it on the public stock market, and raise funds that way. Again, it's an idea. I don't think he's going to merge them both. But yes, I do believe both of these funds are going to be public It'll be interesting to see this play out. His prediction is this year. I think this is too quick. It's not going to happen. More 2026, 2027 things. So interesting news or interesting stuff on the horizon. So stay tuned. We'll be sure to unpack it all.